Testing 1 2 3. Testing 1 2 3. Good morning, everybody, and welcome back to another Crypto Warehouse show. It's the 12th of March. It's 11 a.m. We are live. We are not AI generated bots, and this is not a recording. Good morning to everybody in chat. Good morning to Hidden Agendas. I'm sure Kishan is out there somewhere as well. Good morning to the rest of you. What are we going to go through today? Well, Bitcoin is sitting just around $72,000. This time last week, where were we? Where were we 2 weeks ago? Have a look at the charts and see where we've come in the last 2 weeks. It's been incredible. So what we're going to go through today, we have, of course, the X-Files. We're going to look at the $200,000 target for April. We have more Sailor purchases. We're going to have a look at what Trump has said about Bitcoin. He's just recently done a speech. What's he had to say about Bitcoin? We are going to look at the Ripple, well, the XRP pump, which was totally unexpected yesterday. We're going to look at London calling. What are they going to do in London to do with crypto? And then final thoughts. And then, as you can see, if you are new here, bottom left-hand corner, we have the total number of fans, just over 106,000. You can help us out by following, subscribing, whatever buttons you've got in front of you to notify you of when we stream. Every day at 11 a.m., Monday to Saturday we stream. We do 2 trading streams on Monday and Wednesday nights at 9 p.m. as well. So that's 8 times a week we stream at the moment. $74,000 today. Are we going to get there today? Are we going to hit that $74,000 mark that I've been talking about for the last few weeks? We've had a bull pennant. The bull pennant touched $74,000. Are we going to get there? Who knows? Who knows? Nobody has a crystal ball. Good morning, Mags. Bom dia, as you would say. I hope you are well. And let's get on and have a quick look at the prices, shall we? So, crypto market in general, 2.69 trillion, up just a touch. Volume, 152 billion, very nice. Again, Bitcoin dominance is starting to creep up, 52.4. Remember, this time last week, I think we were at 51.5. So Bitcoin dominance is pumping. ETH dominance is just holding its ground, 17.8. Again, as I've said for the last few days, the entire crypto market, 70% of it is held in Bitcoin and Ethereum at this moment in time. Bitcoin coming in at just under $72,000 and Ethereum is sitting just above $4,000. Incredible. Absolutely incredible. Let's have a quick look at what's had again. Toncoin, we covered it last week. I am not 100% certain that Toncoin at $12.3 billion is accurate, and I don't care what the price goes to. I think that's incredibly high for a coin of that stature. XRP is up almost 11% in the last 24 hours. It's just under 70 cents. IOTA is up, Flow is up, Synthetics is up. Avalanche is having a good time. We're going to talk a little bit about Avalanche later on. I think we've got an X-file about Avalanche, or a project that's about to launch on Avalanche. Injective is up just a touch. Wemix, Gnosis, and Litecoin. Is it going to take $100? I think we're at $94, $95 yesterday. Are we going to break $100 and make Tariq cry? That's what I want to see. What's lost? Dog with hat. Gala is down. Remember, Gala, my target was 6 cents. It's at 7 cents. It's got to where I thought it was going to go to. If you sold now, you'd be making probably a 3x on it. Render is down a touch. Pepe, Fetch, again, I'm not too concerned about these 2 coins here, Fetch and Singularity. Both of them are my picks for the AI market. They've come a long way since I started covering them. They were both about 20, 30, 40 cents. So they've done incredibly well. And Stacks is down a little bit. So a nice mixed bag today. The entire market isn't pumping. There are some corrections to the downside, and Bitcoin is holding steady at $72,000. Who would have thought it? Who would have thought it? We'll have a look at the Bitcoin chart later. We've only got 2 charts today. We're going to look at the Bitcoin chart, and we're also going to look at the XRP chart. That's it for charts today. I am still aiming to do the show in the hour, but I am going to go a bit slower today. I have people digging a road. They started digging at 10:45. So I'm probably going to be distracted by the noise of drills in my head as the show goes on. So I'm going to go a little bit slower than normal. I hope you don't mind. So let's go and have a look at some of these X files. And remember, wherever you are, say hello in chat. Let me know what's going on. Let me know what you're up to. I am trying to keep a lid on all of these giveaway bots that pop up in chat. But once we go live, it's pretty much impossible to stop them. So whatever you do, don't click any links in chat. They will be scams, or just don't go near them. Don't touch them. I am trying to see who's here. Andy is here. Good morning, Andy. I hope you are well. I hope you all indeed. Okay, let's get on. So this was Avalanche has brought on a new MMO today, which is MapleStory, and it's expanding into the blockchain, and it's chosen AVAX. It was going to go to Matic. It's, however, decided to choose AVAX. Yes, I know it's been a while. Took my vacation away. Crucify me. So the marketplace, special thanks to all the fans out there. What's new? So this is MapleStory. Now, for those of you that don't know what MapleStory is, I believe it's the largest South Korean game, I believe. So this is big news for AVAX, or Avalanche, should I say. It's big news for them. They've managed to steal a project from under the nose of Matic. And as we all know, Matic is a monster when it comes to NFTs. And this is a big green tick for AVAX. And that's one of the reasons that their price has pumped today. And I don't know enough about the game to talk about the game, but apparently it's very good. It's very good. But again, I have no idea. So VanEck posted this yesterday. VanEck is one of the big 9, the ETF companies. Because we believe in Bitcoin so much, starting tomorrow, which is today, you can now invest in HODL, which is their Bitcoin trust, with no fees until the 31st of March 2025. So if you buy $100,000 worth of Bitcoin through them today, they will not charge you a cent in fees for the next, what's that, 2 years? The next 12 months. Pretty good. We knew this would happen. This was one of the big things that happened in January when Grayscale refused to change their fee structure. So you had the huge outflows from Grayscale, which caused the market correction. It then went into BlackRock, it went into VanEck, it went into ARK, and the money distributed. So there wasn't really, we could have done without that. We could have done that without that in Vanguard, but it happened. So we're now in a fee war. All of these Bitcoin ETFs are going to try and clamor over each other to offer the cheapest prices possible. Now, VanEck know, as do we, that if you go and buy their ETF today and you hold it, you're probably never going to withdraw it. So they know that if they bring in $1 billion worth of extra funds through this initiative, that probably from April onwards next year, they're going to hold on to probably 700 or 800 million of that. So it's a good marketing strategy. It's like giving you your first 3 months free at a gym. You join the gym, you probably never cancel the membership, and you stay with that gym. You're not likely to go elsewhere to save yourself £1 or $2 or $1 or $2 a month. So it's a good move by VanEck. And then the details down there. They've already hit $1.5 billion, and this is VanEck. This isn't even the top Bitcoin ETF. So again, expect to see more of this. There's going to be huge fee wars. Good morning, Tartarland. I hope you are doing well. I hope you are doing well. Again, it's a slightly slower show today because there is drilling in the road outside. Literally 20 yards from where I am, there is drilling going on. So it's very difficult for me to do my fast-paced show that I did yesterday. So I'm going to go a little bit slower today. So the Bitcoin ETF volume for Monday, which is the 41st trading day. This is huge. $5.3 billion in volume. Now, as I keep saying, volume and inflows are two different things. Volume includes inflows. You may have seen $3 billion coming in and $2.3 billion coming out. Volume and inflows are two different things. Don't think that $5.3 billion of Bitcoin was bought yesterday, because it wasn't. There is a slight mistake on there. I'm sure ARK Invest haven't got $35 worth of Bitcoin on their books. I'm sure it's a lot more than that. One of the best days since the launch in terms of volume. Looking forward to the total net inflow of the day. That is what is important, because that tells us how many Bitcoin a day are being taken off the market. Now, I do want to say one thing about this. So Benjamin Cowan, good morning, Solo Sky. Ben Cowan is probably one of my favorite crypto commentators, let's call him that. And he was talking yesterday about the fact that we have reached 0.8 or 0.9 in terms of risk based on price of Bitcoin, in terms of how far we've come, how high we've gone. And 0.9 is kind of like, it's risky to be buying Bitcoin right now in his eyes. And he has a chart that's been, I think it's either gone back to 2019 or a little bit further back. So over the last 5 years, and it's been 100% accurate. And he has said that now is not the right time to be buying Bitcoin, according to his chart. Not his opinion, not the opinion of other crypto influencers. According to this chart, we've gone from flashing blue and green to flashing red. Now, my thoughts on this are that, as I said yesterday on the stream, there's only 900 Bitcoin a day being bought. And as of April the 20th, 450, made, created by the miners. If these ETFs continue to buy more than 900 Bitcoin a day over the 5-day period, they will be buying all of the Bitcoin that is being produced. So until these ETFs, the inflows into these ETFs drops below 900 Bitcoin a day, we are not going to see the massive correction in Bitcoin that everybody is talking about, in my opinion. Now, the one thing that nobody's talking about at the minute is what happens when these ETFs start to sell more than they buy. What happens when their trading volume is $4 billion worth of sales a day and $1.3 billion of buys a day? So the net will be 3.7 or whatever it is, $billion a day outflow. What happens at that point? Is that going to happen? I don't know the answer to that. So Ben is talking about the fact that Bitcoin is now too risky to buy at $74,000 or $72,000. It's too risky to buy. And my argument is that until this ETF equilibrium is found, it doesn't matter what any chart is telling us, because we've displaced all of our data. Because in January, we introduced a vacuum cleaner to crypto that's sucking all of the Bitcoin out of the market. It's taken over 200,000 Bitcoin, 300,000 Bitcoin, I think, out of the market. That's 1.5% gone in a month. It cannot possibly continue at the rate it's going, but it will continue for a long while longer. And as Ben says, his risk metric of 0.8 and 0.9, that can continue for days, if not weeks, if not months. So the problem is that when you're telling people not to buy Bitcoin at $72,000 because it's going to correct, where are the people that were holding on for the correction at $25,000 and $35,000 and $45,000? People were coming on here telling me that we were going to go back to $36,000. Well, we're at $72,000 now. We never hit $36,000. So where are all of these people holding on for this correction? Are they still holding on for the correction? We will have to fall 50% from where we are now to get to $36,000. What is going to cause that to happen? That's the question to ask. So for me, and my personal circumstances, I am going to continue to dollar cost average into Bitcoin. I've got staked Ethereum, so I don't need to do anything on that. I have staked Solana, haven't got anything to do with that. So I'm kind of still really just buying Bitcoin at the minute. I did buy Jupiter for about a month. I've stopped that now for a time, and I'm going to focus on Bitcoin. I wouldn't listen to anybody telling you that we're going to go to $500,000 tomorrow, and I wouldn't listen to anybody telling you that we're going to go to $45,000 tomorrow, because nobody has a crystal ball. I don't have a crystal ball. I just look at what I see in front of me, and that is massive inflows of cash to crypto, which is going to buy any dip. I mean, if you think about it, when would the dip likely to happen? It would happen on a Saturday or a Sunday, because they're the 2 days of the week that we don't have the ETFs. The ETFs don't trade on Saturdays and Sundays. So is that likely to be the best time for a correction? Could we see us going from 72,000 to 64,000 on a Saturday or a Sunday? Yes, we can. That is possible. But I don't see us going from 72,000 to 36,000 or 45 or whatever it might be over the weekend. It's too big a correction, in my opinion. Now, the one thing I am going to, the last X file that we have, and remember, I am going a lot slower today because the noise is distracting me. So I'm going to try and stay focused. To do that, I need to be a little bit slower. So I covered this in a video that I made yesterday, but I'm going to explain it very quickly. And Zeus Network it won the first Jupiter LFG vote. And if you don't know what a Jupiter LFG vote is, Jupiter is a decentralized exchange, and it's got a launch pool where projects come along, give out a percentage of their tokens to people that vote for them in the DAO vote. And Zeus won by a country mile, 58% of the vote. But that's not important. All I would say is to go and check them out yourself. Go and have a look at their platform. What they are doing is they have an app called Apollo, a DApp called Apollo, and it is going to connect the Bitcoin blockchain to Solana, and they're going to create a kind of a DeFi platform. There's going to be potentials for NFTs, for stable coins, and we've looked at these before, by the way. We've looked at layer 2s, Bitcoin layer 2s that are doing similar things. We've looked at ones where they're going to offer native Bitcoin staking, where you are rewarded in other blockchains tokens. We've already looked at those before, but Zeus is going to offer something similar, where potentially you could stake your Bitcoin and earn a yield from people borrowing a synthesized version of that. So go and check them out. They won by a country mile. They were my pick, and I picked these when Sharkify and Uptick, I think they were called, they were winning, and Zeus came through at the end, and as I said, they took the votes. So go and check them out. They do have some very big early stage investors. They've got Anatoly from Solana, and they've got Munib from Stacks. Stacks is, of course, the Bitcoin layer 2. So they have got some big backers behind them. There is no token, by the way, for this project yet. The Zeus token will be launched soon. So this isn't something you can go out and buy on the exchange you're watching us on today. This is really early. They still don't have the team built out. They still don't have everything in place. It's very early. If you look, they only created their Twitter account 3 months ago. But go and check them out. Worthy of being mentioned on here, because it is something I think one of the big futures for blockchain, apart from gaming and apart from AI, I think one of the big advancements we can make is to tap into Bitcoin. If you think about it, everything sits on Ethereum. Ethereum has got multiple layer 2s. What does Bitcoin have? It has the Lightning Network. Could you name anything else? Ordinals? Can you name anything else? Maybe stacks? And then you're starting to push it. You're starting to kind of rack your brains to think of things that sit on Bitcoin. And I know you've got people like Michael Saylor saying, you know, it's digital land and you shouldn't touch it, whatever. But gold is used for everything. Gold is a store of value. Gold is used in jewelry. Gold is used in mobile phones and computing. Gold has multiple uses. So why can't we tap into Bitcoin? It's over 50% of all the crypto market. So if we can find a way to utilize Bitcoin, help it secure another blockchain or provide DeFi on there, why can't we do that? Purists won't like it. Hackers probably will, because there's opportunities there to steal Bitcoin. But let's have a look at what comes along in the next few years. Good morning, Danny. I hope you are well. And Tariq, good morning to you, sir. We have an article. Oh, no, we don't have an article. We had an article yesterday about Litecoin just for you. So, crypto expert reveals why Bitcoin could hit $200,000 by April. Now, this might sound crazy, but having looked at some of the... There's been some tweets today, and historically, when Bitcoin hits an all-time high, one of two things happens. It doubles in price in 18 days, so we would be at 144,000 in April. Or it takes 3 months to double in price, which would be June. But either way, in the history of Bitcoin, it has taken either 2.5 weeks or 3 months to double in price. I don't know whether that's going to happen. Remember what we say on here, history doesn't repeat itself, it rhymes. So we're never going to copy history, but we will follow along the same path as history, especially when it comes to, you know, a programmable asset like Bitcoin. So an analyst has forecast the price is to surge to unprecedented highs ahead of the halving, having gone over the $70,000. In a recent Twitter post, crypto analyst Gert van Lagen provided a compelling narrative supporting Bitcoin's bullish trajectory leading up to the halving in April. Now, again, there's some question about what date in April. It's the 18th, or it's the 20th of April, or it's the 9th of April. It's the first 2 weeks, first 2 or 3 weeks of April it's going to happen. Because, of course, it's based on the blocks, and the blocks take different amounts of time to process. So it's soon. In fact, it's probably a month away from where we are. A month, 5 weeks away. So showing a price chart illustrating Bitcoin's recent bullish movements, Lagan revealed that the cryptocurrency doubled in value within 10, 18, and 84 days following the surge to new all-time highs. As a result of this massive rallying trend, the analyst confidently expressed his belief that a move to $200,000 before the halving in April is becoming more possible. Now, the only thing I would say about this is we have a way higher market cap now than we've ever had. So that would be one thing to say, that it might take a lot longer than people think. I know we have ETF money coming in, but there's always a reason. You know, we had the pandemic, we had other things, we had interest rates. So it's not set in stone that we could hit $200,000 in 10, 18, or 84 days. Let me make that clear. The Bitcoin halving marks an event where the rewards for new blocks are halved. We know about that. We're going from 900 to 450. The cryptocurrency's achievement of a new all-time high before the halving stands as an extraordinary occurrence, underscoring the immense demand and growing popularity of Bitcoin in its space. So we've smashed the 70,000 barrier. The cryptocurrency has recorded an unprecedented surge, amassing approximately 2.68 and currently trading above $71,000. We're at 72 as of today. Volumes are up. There's the chart. And he doesn't give the actual reason then why we are here. Other analysts have predicted bullish outcomes. The Bitcoin therapist on X, Bitcoin is expected to hit $100,000 by April. Additionally, a steady rise to new all-time highs at 75,000 is expected before the halving, as stated by another analyst. So everybody's pointing up. Now, when everybody points up, that tends to indicate that we're going to come down. And that's just the way it is. That's the way Bitcoin works. You see it all the time with the liquidations of longs and shorts. You see Bitcoin go to $55,000, $60,000, and the longs come flying in. And then what happens? I think I've got the wrong Bitcoin chart on here. I have the wrong price, I think. Well, maybe I don't. Let me go and have a look. No, we don't. We're okay. We're on the right price. So let's go back to here. So we are still moving along quite nicely to my target of $74,000, which I made a week last Saturday, I believe. So 9 days ago, I said we would go to $74,000, but I did say we would go to $74,000 by last Friday, and we're now Tuesday of the following week, and we're not there. So we're a little bit slower than I expected. We are still looking at moving up, but we have to always check the RSI is high. Maybe we replicate this kind of action. Maybe we do this, and maybe we have another few days before we break. Maybe we don't break it until 26th of March. But I think, again, when we look at what we were looking at in the X-Files, which is all of this money coming in via the ETFs, what do we do when we get the bell, the opening bell at 3:30 today? 4 hours from now, the bell opens. Where do we go? We go up, because the ETFs come in and buy another $2 billion of Bitcoin. So again, 10,000 Bitcoin disappear today. 10,000 Bitcoin disappear tomorrow. Good morning, Jenny. I hope you're well. 10,000 go on Friday. So over the next 4 days, we could lose potentially 40 to 50,000 Bitcoin from the markets. That's unprecedented demand. So much as I think we could have, again, this stepped approach, which is what I like to see, again, it's all absolutely dead in the water, because if we open with a 10,000 Bitcoin buy order, we're going to be here, and there's nothing, whatever I say, whatever you think, it's irrelevant. When that amount of Bitcoin is being bought, it's going to rocket. And we're not seeing these ETFs slowing down. They're just getting more and more active. They're going to see more people. They're applying it to more of their own funds. You know, this 3% allocation to Bitcoin. It's all bullish. And I know what Ben Cowan is saying. If you go back to the weekly chart, it's absolutely apparent that this is not a healthy rise. I mean, that's insane. And you can compare it to here. Yes, we did that. We did that same move, but this move happened after the halving. This move happened a year after the halving. We're not even at the halving yet. So if you stop to think about it for too long, the price of Bitcoin and where it could go to is quite scary. And I get that, because for people to sell at $75,000, there needs to be Bitcoin to sell. And the sell wall isn't there. There's no Bitcoin left to sell at this moment in time. So you have to look higher. Now, I'll give you a good example. Let's say the sell wall, there we go, $99,500. Okay. Let's say that in this gap here, there are 1,000 Bitcoin to sell. And we're saying there's 10,000 Bitcoin going to be bought today. But at this price here, there is 8,000 Bitcoin at 99,500. What happens to the price is give or take bots, give or take trading bots, it will do that. And it will go to the next sell wall, which is 99,800, 99,700. If you don't have sell orders along the way, there's nothing for the ETFs to buy. So why did we struggle when we got to 69,000? Because that was the previous all-time high. That's why we struggled. And we didn't really struggle for very long. We struggled for 3 or 4 days because there was a huge sell wall at that price. So think of where the next sell wall would be. Would it be 80,000? Would it be 90,000? Would it be 100,000? Those are the things that we need to be looking at next, because again, 40,000 Bitcoin has to be bought this week. It has to be bought from somebody, from somewhere, at a price. And there will be orders here. You know, we're not going to go straight up in, going up in a straight line. There will be orders all the way along here. You know, maybe at that price, maybe at that price, and then certainly at that price. But if you look at the really clever, deep analysts that look at these patterns and these sell walls, I think on one of the exchanges on Monday, there was only 150 Bitcoin left in a range between $70,000 and $75,000 on one exchange. So of course, what's going to happen? The price is going to pump. We don't have enough Bitcoin left. We've absolutely smashed through everything. All of these little kind of corrections here have been bought up along the way. So I'm not expecting a correction anytime soon. I'm not expecting a correction before the halving. That's certainly not in my books. I think we did have the correction here. I think that was a 20% pull down, and we do have to be careful, not from the ETF point of view, that we could end up here, and then this is going to take weeks to catch up. So if we do go to $120,000, for argument's sake, where do we go from there? Because we've got a year left and we've just halved the supply. So is halving the supply going to compound this problem that we've got? So believe it or not, I'm not bearish. If you can't tell by what I've been saying, I'm certainly not bearish at the minute. There are going to be days where we drop 5% and 4%. I'm not saying we're not, but I don't see $42,000, $45,000 on the cards, especially when people like this are coming along and just buying another $821 million worth of Bitcoin. So Michael Saylor now holds, through MicroStrategy, 205,000 Bitcoin. The latest acquisition was funded by its debt offering, which we covered last week. And we covered, there was a $700 million debt offering last week. He's now managed to buy $821 million of Bitcoin. 205,000 Bitcoin they now own, which is staggering. Again, 1% of the supply. There's only 20 million Bitcoin. Anybody that tells you there's 21 million Bitcoin needs to appreciate that Satoshi mined the first 1 million. So there's only 20 million Bitcoin. He now owns 200,000, 1%. BlackRock own 1%, maybe more now, maybe 1.2%. So it's disappearing, and it's disappearing from your pocket to their pocket, and they're never going to sell it back to you. So that's why you shouldn't be thinking about selling your Bitcoin right now. Not financial advice. So the purchase was financed by the net proceeds from its convertible debt offering. With the purchase, They bought another 15,000 Bitcoin for nearly $1 billion since the beginning of the year. As a result, they now have $205,000, costing $6.9 million at the average price of $33,706. So he has doubled his money. Good old Michael Saylor. The purchase is coming on the heels of Bitcoin's climb to new all-time high. We don't need to cover that. So the MicroStrategy's investment is now worth $14.7 billion. They've paid just under $7 billion. So he's made 7.7, 7.8, 7.9, whatever it is, $billion. Incredible. Last week, the company disclosed plans to raise $600 million. It raised the target to $700 million. The overwhelming demand pushed it to $800 million. And the success reflects the high institutional interest in MicroStrategy. Remember what MicroStrategy is. It's not really a business. It's a proxy business. It's a company whose whole worth is held in an asset. So when you buy MicroStrategy, you buy Bitcoin because the company is worth probably $300 million. But the Bitcoin that they hold is worth $14 billion. So everybody knows that buying MicroStrategy is buying Bitcoin. The similar way, if you look at buying Riot, the Bitcoin mining company, or any of those mining companies, you're buying them and their value is based on the value of the Bitcoin that they mine. Same way if you go and buy stocks in diamond or gold miners, the value of that business is based on what they dig out of the ground. So the chairman has said Bitcoin is digital property. It is superior to other investments such as gold, equity, or real estate because it is digital, available, global, ethical, and useful to millions of companies and billions of people. And he has no plans to sell because Bitcoin is the exit plan. That's an interesting comment. If you listen to some of the comments over the weekend by BlackRock, the CEO of BlackRock, he was saying something similar. He was saying that when you take off the American rose-tinted spectacles and you look around the world, Bitcoin is more important to people for different reasons than Americans. So if you look at Africa, for example, or you look at somewhere with incredibly high inflation, Argentina, if you look at those countries and those continents, it means different things to different people. It can mean in Africa, where they have just a huge percentage of people who don't have banks, they're not allowed to have bank accounts. They can use blockchain technology and Bitcoin to trade, the Lightning Network. If you look at Argentina, where inflation was running at 60-70%, they use Bitcoin to hold the value of their savings against their local currency. So it means different things to different people, but it's a store of value, and it's a trusted store of value. And if you were to say to people, what do you trust more? Do you trust the US dollar, which is now being dethroned as the global reserve currency? Do you trust that? Or do you trust Bitcoin, which is backed by this huge decentralized network? You would trust Bitcoin. If you've studied Bitcoin, you will know why there's more trust in it. It's uncensorable. You cannot stop Bitcoin. Everybody talks about, what happens if there's a huge power cut that blacks out the world? Well, number one, we're pretty much all screwed. But number two, when the lights come back on, the blockchains across the world will just restart. The same way that the internet goes down, there is a way to communicate without using the internet. So whatever way you try and stop Bitcoin, you'd have to stop the entire world to stop Bitcoin. And that's never going to happen unless we get hit by some kind of weird cosmic solar ray or something. But anyway, Trump saw Bitcoin as a direct threat when he was the president of America. And why did he do that? Because he appreciated that it was a threat to the dominance of the US dollar. That is why. So he has no intention of stopping people from using Bitcoin. Again, not so much a 180. more of a 45. Despite his recognition of crypto's growth, Trump strongly advocated for the continued dominance of the US dollar as the global reserve currency. This is what it's all about. However, he's moved his goalposts, which is good. We introduced him to crypto through his NFT platform. He made himself a few $1 million out of it. I'm sure he understood the benefit of that. And now he understands blockchains a little bit more than maybe he did. So he says that Bitcoin is an additional form of currency and it's taken on a life of its own, and he has no intention of stopping people from using it. He made this statement during an interview on CNBC's Squawk Box on March the 11th. His comments come amid a backdrop of growing interest in crypto as Bitcoin has once again entered price discovery mode. Despite the recent recognition of crypto's growth, Trump strongly advocated for the continued dominance of the US dollar. Now, we know why he wants the US dollar to be the dominant force, because they can print it and they can print it, and if it's the reserve currency, then the impact of that printing is dissipated because it's held by multiple countries around the world. Trump recounted a personal experience where people used crypto to pay for limited edition sneakers launched as part of his branding campaign. He added, "It was wild. I call them crazy new currencies, whether it's Bitcoin or others." He also touched upon the regulatory environment surrounding digital currencies, suggesting a measured approach. He expressed a willingness to allow the continued proliferation of cryptocurrencies, provided it does not undermine the traditional finance system. Now, the one way that Trump could control Bitcoin, not control Bitcoin, but have some level of control over crypto, is to promote USDC and USDC as regulated currencies to be used by everybody across Solana, Ethereum, whatever it might be. Why? Because that is pegged to the US dollar. So by promoting the use of US dollars as stable coins, they will hold some weight over cryptocurrency. On and off ramping is different for different people around the world, obviously. But if America could use the US dollar as the reserve currency of crypto, that would give Trump what he wants. And I wouldn't have a personal problem with that. If they can sort out their hyperinflation, if they can sort out their money printing, if they can try and reduce the supply, pay off some of the debt, then the US dollar is a fine currency to use. But we all know currencies have a finite lifespan. They only last, is it 200 years, something like that? 500 years? It doesn't last very long before they get printed into oblivion. And remember, the reason that a currency folds is not anything other than the country of origin destroys it itself. It prints it into oblivion. So Trump should look at this as a way to promote America. I have seen there is lots of use of that crypto, and I'm not sure that I'd want to take it away at this point. He says he remains a traditionalist and wants the US dollar to be the primary currency. Maintaining the dollar supremacy is crucial for our national interest. The former president said too many countries are trying to find alternatives to the dollar, but he would not allow them to get away from the dollar. Well, we only know one way to stop them from doing that, don't we? And we're not going to go into that on this channel. So Trump has seen the light, should we say, when it comes to crypto, at least. So XRP price breaks above the multi-year consolidation. Here is what it means for the crypto space. I'm trying to make this large enough for you to actually see on the screen. I think I'll leave it at that size. The XRP price has maintained this steep ascending trend ever since the token rebounded from its 2020 lows. The price further went up by more than 1,000% and also encountered a drastic bear market, losing 80% of its gains. The bullish or bearish trend prevailing within the market, XRP price held the lower ascending trend line, which has been acting as strong support since then. I've got the chart that I haven't touched. I say this all the time on the channel. We don't pre-draw our charts. The charts are there from one stream to the next, and I've not drawn an interesting line that I was going to draw last night. I thought I'll do it on the stream so people can see just how much of this channel we've managed to stay in. So we'll go through that in a minute. Now, the question arises whether the XRP army is late for the party or whether the market participants have just shifted their focus over the top altcoins like XRP. Again, you've got to understand, we haven't had the halving yet. And people are talking about $1,000 Solana or altcoins running up to a $20 billion market cap, $50 billion market cap. We're not there yet. We've not had alt season. We are so early. We've been front run by the ETFs. That's what's happened. All of the top coins, yes, Chainlink has ripped. Yes, the meme coins have ripped. Yes, you've had the odd coin in the top 20 outperform everything else. But that doesn't make BNB, Cardano, XRP bad projects. Or Matic for that matter. We've got another year, maybe a year and a half left of the bull run. Don't worry if you're holding Matic or Cardano or XRP. Their time will come, and when their time comes, they will leave everything in the dust. The more consolidation you have in a coin, the better it is for the coin. What's the point of going to all-time highs in March 2024 when the potential bull run finishes in November 2025? All of your ammunition, all of your fuel for the fire will be burnt. That was one of my concerns that I've had for a few weeks now with some of these altcoins that have ripped up. You know, Solana at $150. Its all-time high was $250. We're nowhere, you know, we're only 40% away. XRP, Cardano, Matic, for example, they're still 3, 4, 5, 10x from their all-time highs. So just be careful that some of these coins don't get burnt out. And by burnt out, it means if Solana goes to $1,000 in December, I am going to sell my Solana because I will have 30x'd it, 40x'd it, and I will take profits. We don't want profit taking along the way just yet. We want to have a slow and steady race that lasts the 18 months. We don't want to burn our bridges in March and have nothing left by the end of the year. Where is the momentum going to come from by the end of the year? Think about that. So XRP, I'm still bullish on XRP. If you read the use case for XRP, you would also be bullish. So there are plenty of targets for XRP along the way. We've got 77 cents, 80, 85, and of course, the mythical dollar. Let's go and have a look at the chart then. And as I said, I did look at this chart last night and I was going to redraw it, but I thought I would wait until the stream to go through this with you. It would only be fair. Is this the one I was looking at? There we go. Right. Let's go to here. Okay, so what we've done is we had this channel that we were in for about 2 weeks and we came out of it. And if we just drag this up a little bit, what we'll see is we came up, we came up, we came up again, we broke down, we rattled around. Guess what? We've come straight back in and now we're sitting back in this channel. So we do have our longer term trend line down here as well. Don't forget, the one that we've been talking about all the way back since, Jesus, this is going a long way back now. This is going back to June 2022. This is nearly 2 years ago. Okay. We followed this, not quite to the letter, but we followed it. Now, when we came up, where did we come up to? We came up to this fib level. And why is that important? Because we've been here before. And we're here again. And this fib level here, 72 cents is that fib level. That's where we came and touched. Where, again, do we have that up there? Let's bring that down a bit. we have about 84 cents. Where do we have 95 cents? Pretty much ties in with the article that we've just been reading. So it's nice to have confluence that your chart, however badly drawn your chart is, it does tie in with what other people are saying. And as I've said, we've got this nice additional channel now that we've gone into, which is moved us up from 53 cents to 72 cents. I mean, that's a good 40% move in no time at all. 2 weeks. So I do think we are going to see some more challenges. If we do break 72 cents and we do drag this line out a little bit. Hang on 1 second. Let's get back to that line. So if we draw this back up towards here, this back up towards here, March, 2 weeks from now, we should be back at this 84 cent level. That's a, what's that, a 20% move? 20% move for me for XRP. I think we're going to keep moving up. And again, court case, more documents were filed this week. That's going to come to a conclusion, hopefully sometime this year. And that's going to cause a dramatic pump in the price of XRP. We are certainly going to go over $1 once that court case is finished. Remember, institutional investors are not going to buy a coin that has an SEC ruling on it. It's not going to happen. So institutional investors will buy Bitcoin. They will buy Ethereum. But they will not buy XRP at this moment in time, even though the court has judged that XRP is not a security when it is sold on an exchange. That was black and white. The initial coin offering, and whether that was an issue of a security with the promise of increasing in value, if they lose that, or if they are willing to settle and pay $200 or $300 million, once that court case is finished, institutional money will flood into XRP. XRP is going to be the backbone of the banking system around the world and the backbone of many CBDCs. So think about the potential upside for the value of XRP. That's all I'm saying. It has more use cases than most of these coins outside of the top 50, which is why it's ranked so highly. But it's being subdued by these court cases. The money isn't flowing in because of the court cases. So once we're clear of the court cases, XRP should be over $1, maybe $1.50, and it should hold that quite relatively easily. And then hopefully over the bull run, we will see a $5, $6, $7 XRP. I'm not going to give you a ridiculous target of $689 or whatever people say about XRP. It's never going to happen in the next bull run. Maybe 3 bull runs, 4 bull runs down the line when the dollar has depreciated even more, but it's certainly not going to happen this time next year or November next year. I think if we can get anywhere near $8 for XRP, I think we would have had a massive run. And finally, the noise, believe it or not, outside has stopped. Hallelujah. I can hear. Okay, so this isn't the article I'm supposed to be looking at. Oh, London. You know what I've done? I've pasted the article twice. Give me 1 second until I find it. This is it. That was quick. So, the next gang to get involved with crypto, for me, is going to be the stock exchanges. We've seen the NASDAQ look at them. We've heard BlackRock talk about tokenizing shares, tokenizing real-world assets. They see that as the next big thing in their eyes. London Stock Exchange, probably the second or third biggest stock exchange in the world, are now going to accept Bitcoin and Ethereum ETNs. So the UK's Financial Conduct Authority said it would not object to requests to create a market segment for crypto-backed ETNs. Now you might be screaming, what is an ETN? Well, an ETN is an exchange traded note. And this is the second quarter of 2024. So April, May and June this year. Just in time for the halving to have happened. Or again, I talk about ducks being in a row. This is just another one. We know the ETFs wanted to get their ETFs launched before the halving. And we know that stock exchanges are going to want a piece of the action. The reason they want a piece of the action is that crypto, blockchain technology, makes them obsolete. It makes them obsolete. Over time, it makes trading desks obsolete. It makes, the London Stock Exchange is what, 300 years old, 200 years old? It's got people in bowler hats that walk around buying and selling hundreds of millions of dollars worth of stock every day. Well, it's only 8:30 till 4:30, Monday to Friday. What happens if you want to trade, your Shell or BP shares? If you want to trade them on a Sunday or a Saturday, you can't, can you? So stock exchanges are going to need to adapt PDQ to actually have a future. That goes for the ones in Europe, the ones in America, the ones in Asia. And it will require, admittedly, government intervention to stop the end of stock exchanges. Maybe that you have to have a license to issue these blockchain-based synthetic versions of stocks, which is where the London Stock Exchange and NASDAQ and all the other ones around the world will keep their dominance. But over time, that dominance will start to wane a little at least, unless they embrace crypto. The exchange said that crypto ETNs should be physically backed and non-leveraged. They should have a market price or value measure of the underlying asset that is publicly available and must be backed by Bitcoin. So, again, this is a spot price ETN. So it's not something where you can sell this ETN on a 10x of Bitcoin or a 5x of Bitcoin. It has to be, if Bitcoin is $72,000, that ETN has to be backed by $72,000 worth of Bitcoin. The exchange highlighted that the underlying crypto assets should be wholly or principally held in a cold wallet or something similar. Now this is, again, it's chalk and cheese compared to how the Americans are trying to deal with it, through basically trying to make people sound like criminals for dealing with crypto. The UK is always more interested in the bottom line and how to make money out of things. They've been doing this for 400 years, 500 years. They know how to make money out of things. So you get a more open approach and a more entrepreneurial approach than you do in America. In America, it's very much a controlled market, controlled by the big players. The UK is a little bit fairer as that is concerned. Now, the assets should be held by custodians subject to anti-money laundering laws in the UK, the European Union, Switzerland, or the United States. Again, sensible. So these are debt securities which provide exposure to underlying asset. Again, it might sound like an ETF because it is pretty much the equivalent of an ETF. They do have ETFs in the UK, they do have ETFs in Europe as well, but this is just something similar. And an ETF is widely considered a soft alternative to ETFs. Unlike ETFs, the ETN is a debt instrument backed by its issuers rather than a pool of assets. ETFs often focus on esoteric debt strategies that do not easily fit into funds. So there we go. So all in all, we've seen a far better approach, and this should be headline news. And that's why I've put it in the show today, even though it's the last article. This is massive. The third biggest market in the world, the second biggest money market in the world, and probably the third biggest exchange in the world, is going to allow these ETNs. And again, it might not be hundreds of billions coming in on day one, but it's certainly going to be billions coming in. If you are in the EU or if you are in the UK and you don't necessarily want to deal with the issue with having American ETFs, you want to go and use something that you trust, it would be an ETN via the London Stock Exchange. It just has that that seal of approval. You know, the gold, for example, that's been stored in London has never been stolen. It's been there for hundreds of years in the underground vaults. It's the safest, probably not the safest place on earth. One of the safest places on earth is where they store the gold in London. So if you're going to have a place that you trust with your assets, look no further than the London Stock Exchange, especially if you're in Europe. You know, I'm sure Spain, Portugal, France, Germany will also have the same offerings in the next 6 to 12 months. But for me, I would always go to the London Stock Exchange, simply because it just knows how to do things in the right way and the fair way. Imagine if America had taken this approach 3 years ago. Imagine what the market cap would have been of crypto if they'd have said, you know what, we're not going to have ETFs, we're going to have ETNs, and we're going to allow people to trade them, but they have to be backed directly by the asset. Imagine they'd done that. They won't have done that because, of course, who controls the financial system in America? BlackRock, Fidelity, Vanguard. They control it. Let's make no bones about it. And they also control the various different senators. So that's why we've got to the stage we're at, because BlackRock and the other big players needed to build out a product that they could take the most money out of, which is an ETF. London Stock Exchange, on the other hand, is only interested in the trade and what's the best way to conduct the trade. They're a different mindset. Whether you agree with either one is not for me to say, but that's just the way it is. So that is pretty much the news wrapped up in an hour and 2 minutes, according to my charts. Now, the one thing, my final thought that I want to say to you guys is to do with the Ethereum ETF. And the reason I want to bring this up is that we are not going to get the Ethereum ETF in May, in my opinion. And I said this on the channel weeks ago. Go back and watch the videos. I have said it before. The reason we're not getting the Ethereum ETF in May, in my opinion, and it might still happen, but in my opinion, why we wouldn't, is Ethereum is not Bitcoin. Bitcoin is a decentralized, uncensorable asset based on mining. There is no official head of Bitcoin. Ethereum has the Ethereum Foundation. It has Vitalik Buterin. It's proof of stake. It's way more dubious in terms of its birth than Bitcoin. Bitcoin has won in a court of law. Not directly, of course, but it's won in the court of law through Grayscale. Ethereum hasn't. The backlash that Gary Gensler has had over this Bitcoin ETF has been tremendous. They are not going to approve the Ethereum ETF. They are going to fight them in court the same way they fought Bitcoin. And that means that the SEC is going to go up against BlackRock. Now, who is going to win? BlackRock, the biggest asset manager in the world, or Gary Gensler and his 6 lawyers who already know they've lost? BlackRock are going to win. But why are they taking them to court? To delay the Ethereum ETF. Could they delay it a year? More than likely. I think we're going to see the Ethereum ETF in March next year. I think they're going to be rejected in May, and I think they're going to be approved in March next year. I've said this before. We're going to have a new government in America. We're going to have a new head of the SEC because Gary Gensler will be gone. I've said this yesterday, I know. I'm just reiterating the point. Hester Peirce, Donald Trump, maybe Robert Kennedy or Vivek, both pro-Bitcoin people. They will come in, appoint Hester Peirce, she will approve an Ethereum ETF, and that could be the second catalyst for the second pump into the all-time high target of November 2025. That's how I see it playing out. And I'm not going to diverge from that because that's just how I think it's going to work. We're going to see a rejection in May. Could that cause the price of crypto assets to fall? I don't think so. I think it could cause the price of Ethereum to fall, but I don't think it's going to detract from Bitcoin. Bitcoin is going to keep ripping until we find an equilibrium between demand and supply. I don't care what anybody else says, until we find an equilibrium between the ETFs and the supply of Bitcoin, the price is going to continue to go up. Because whatever happens, Bitcoin is going to be bought. Ethereum, on the other hand, doesn't have the luxury of an ETF. So it's susceptible to the, don't get me wrong, it's not if, but when with the ETF for the Ethereum. And it will happen for the Ethereum ETF. It will happen. But I don't think it's going to happen in May. Now, I could be wrong. BlackRock could take Gary Gensler round the back of the bike shed and tell him what's what. And say, look what we're doing with our Bitcoin ETF. If you want to come and work for us, Gary, remember you're on borrowed time. You were appointed by Joe Biden, which means you will have to resign when he loses the election. So you're on borrowed time, Gary. If you want to come and work for BlackRock, you need to make the right decision about the Ethereum ETF. Now, that might happen, and we might get it in May. Or he stands his ground, goes to court, loses, or he's in the process of taking them to court or being taken to court by BlackRock. When he resigns, Hester Peirce withdraws the case and approves the ETF. But it's going to be March next year. We don't have the time for it now. We've got 12 months, and in 12 months, we're going to have a new president of America, probably a new government in the UK. We're going to have a new head of the SEC. We've had the halving. We could be sitting at 200,000 Bitcoin, and then the Ethereum ETF gets approved, and that gives us our final kick for all of crypto. Because the second that Ethereum ETF is approved, all of the other top 10 coins are going to sit there and think, right, well, now we need a Solana ETF. We need a Cardano ETF. We need an XRP ETF. We need an AVAX ETF. That could be the next catalyst, which would pump us to even greater prices than we're going to go to. So that was my final thought for 5 minutes at the end of the show. So what I'm going to do now, it's been a good show. I'd like to thank all of you for tuning in and watching. We're getting good numbers nowadays on the different channels. Obviously, I can't name names, but we're getting good numbers. So big thank you to everybody. Gianni, Tariq, Solo Sky, Andy, Mags, Hidden Agenda, all of you. You always go very quiet when I talk. I only imagine that's because you're absorbing everything I'm saying and you haven't fallen asleep. So thank you everybody for watching. Oh, and Tartarland, sorry, I missed you out. Thank you for watching. I am going to go off and make a video now. Remember to go and watch my video about Zeus Network that I made yesterday. It's a good watch. It's only about 11 minutes. It explains how everything works. Remember, watching the videos helps the channel because we get the advertising revenue from that. So make sure to help us out there. I will be back tomorrow at 11 o'clock. So until then, thank you everybody for watching. See you all tomorrow.